Hello, hello, hello. How's it going, everybody? Good morning, good evening, good night, depending where you are around the world. Welcome to a Capital Hungry Monday Market Analysis webinar. Through this webinar, which can be around 30 to 60 minutes long, we will be doing both fundamental and technical analysis on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30 stock market index. We were looking at both the technical and fundamental impacting factors to line up trade ideas and possible trade setups for execution for the coming session as well as overnight and tomorrow. Okay, these are mainly intraday trade ideas as well as potential scalp trade ideas to use for the coming sessions. So just understand, be patient. I'm going to be going through all those pairs, doing a little bit of higher time frame analysis down into the intraday time frames and so forth, breaking down the technical structure, price action, fundamentals, and what trade ideas I see relevant and why. Okay? Please do me a favor. If you enjoy this content, send a like, subscribe, turn post notifications on, and share this stream around. It's free. It's easy to do. And check out all of the links shared in the description where you have access to tons of trading resources at your fingertips. So, last week, the main meat and potatoes of last week and impacting market factor was the Federal Reserve interest rate decision. The Federal Reserve did not hike interest rates, but what they did do was during Jerome Powell's speech, they brought a more hawkish tone towards economic recovery as well as policy positioning. If you've watched some of the previous economic education webinars on this YouTube page and the breakdowns about inflation and central banking, you will understand that the majority of asset classes within the financial market, especially in the US economy side, have been bullish and primarily propped up artificially due to the asset purchase program of the Feds, low interest rates, low prices, and increasing inflation, which inflates the price of everything within an economy. This inflation is good for the rich and bad for the poor, but eventually inflation can be bad for everybody if you start to reach the threshold of hyperinflation. So what the Federal Reserve has been doing over the course of the last 6 months is transitioning more into a hawkish tone where they started to talk about tapering, actually talk about the tapering process, start the tapering process where they decrease the amount of mortgage-backed security purchases and taper other asset purchases per month, and start talking about interest rate hikes. What this does is make the same investing conditions that were so favorable to be buying into the housing market, buying into the stock market, buying into gold and so forth. It removes those favorable investing aspects as majority of these asset classes such as oil, stock market, gold, US housing market, and so forth, they have been at record high price points or all-time high price points. You also have interest rates potentially coming up in the near term from a variety of central banks across the world, which is going to be combating the increasing inflation and a switch in all of those conditions that made investing so favorable. So last week when Jerome Powell brought into the scene that they have a more hawkish tone, they want to start combating inflation, looking at potentially 3 interest rate hikes this year, talking about how strong the economy is, how much stronger the labor market is, you can see we had a downside move of almost $50 an ounce from the 1830s down into the 1780s on gold, playing the sellers in control with those fundamental reasons stated. Not just that, we also had very strong upside volatility on the US dollar, which gave us very nice bearish moves on pairs like GBPUSD and bearish market structure to play, as well as bearish moves on pairs like EURUSD, which had us print new lower lows. Okay? And also this led to some strength on the USDCAD and this short-term pullback to the downside on US equity markets. So, there are some key points that we have to understand as we are coming into this new month. Now, The hawkish tone from the Feds and what we saw from last week, those impulsive movements so far, have been priced in and digested by investors. We can still see that sentiment is holding weight, with gold being more bearish, US dollar being more bullish on the higher time frames. But we are ending a business month here of January and coming into the start of a new month. The same time we had some very strong movement in the market already last week, and this week is a very, very strong economic data week overall. We have tons of economic data from Bank of England interest rate decisions, PMI figures from countries around the world, retail sales from countries around the world, inflation figures. We have US NFP and jobs data at the end of the week. So what we are seeing so far to start the week is the majority of pairs such as gold or these currency crosses that we trade, they are in pullback structure or consolidation structure after having some large impulsive movements. So what I mean is, you can see the fear, uncertainty, and doubt in the equity markets as we went to previous higher time frame lows at 33,400, then started to create a consolidation zone. Now, as we're coming towards the end of the business month and start of the new monthly period and setting up the order flow for the fundamental catalyst to come, you can see from that aggressive bearish run, we are doing a pullback phase, right? You can see a very similar thing here just to start off this new week and potentially new month on gold. We had a very strong bearish rally. Now we're potentially entering a bit of a pullback phase before seeing a retest of better sell points and continuing back down with more volume and volatility coming into the new month. With GBPUSD, you can see very strong bearish market structure forming, sellers consistently printing lower lows, but again, as we had strong movement last week and sellers print new lows, we are entering this pullback phase to potentially go and collect more sell orders before continuing our way down with the overall bearish market structure in US dollar strength. Same thing on USDCAD, except it's the inverse, where with the USD holding more strength and being bullish from obviously a hawkish Federal Reserve, the Bank of Canada was more neutral. So you had weakness in the Canadian dollar, strength in US dollar. You've had buyers continuously print these intraday highs, and just starting off the week a bit softer now, having this pullback phase for the time being. But we have to understand, with the Fed so hawkish, when you're looking at the US dollar movement individually, you can see you have very beautiful bullish market structure, right? You just have buyers continuously printing higher highs, having pullback phases that go collect buy orders from better demanded price points, and continue your way back up. For the new year, we had that aggressive pullback. We went back to revisit these highs. Then we had the hawkish Fed, which led us to have a nice breakout. For this new month, it wouldn't be out of the ordinary for the US dollar to do a bit of a pullback to set up more order flow before again continuing to chug bullish, playing that US dollar strength as the world reserve currency and world business currency, because you can see the same time dollar has been a lot more bullish on the higher time frames and printing higher highs, your US dollar pairs have that correlation. GU is more of the inverse. Euro USD is a lot more bearish overall on the higher time frames. USD CAD has been showing more bullish strength from its lows and buyers grabbing up that dip, following the dollar movement as the world reserve currency. But what we can see on dollar right now is as we printed new highs by buyers, had an impulsive move last week, as we're coming towards the end of the month, start of a new monthly period, we are in that pullback phase, okay? So the reason why I'm saying this is because, again, we're starting the new monthly period and the order flow for that new period of time, right? On top of the fact we had very strong movement last week, it wouldn't be out of the ordinary on something like gold and on pairs like GBPUSD and EURUSD for the new month, that we still get deeper pullbacks to retest significant price points of interest before jumping back into the main trend of the US dollar buyers in control. Okay? So I just wanted to quickly recap what happened last week, why it happened, the bias we are playing in Capital Hungry. And if you followed some of my posts, we are playing gold sells from 1830s, 1820s scaling down all the way to this previous demand area to the left, where we will break this down in a second. We are playing the GBP USD sells, pullback sells, continuation down. Now we're entering a bit of a pullback phase. I'll break that down in a second. And we are playing the Euro USD break of this large consolidation zone on the higher time frame, the same time we had the more hawkish Federal Reserve, and we played these sells into new lower lows as we're still respecting the overall bearish market structure. And we've been playing some of the UCAD buys for those fundamental reasons. Okay, now that same higher time frame bias is still intact. GU bearish, Euro USD bearish, UCAD bullish, gold bearish. But as a lot of the volatility from last week with the Federal Reserve has been priced in, as we're coming towards the end of the month and the start of a new month, as a lot of the economic data isn't until later in the week, it would be perfectly normal to see to the start of this week and the start of this month to see some consolidation or pullbacks against the current trend. Okay? And I'll talk about that in a second, as well as GJ analysis. Now that we understand that in the market impact in our main bias as well as the structure, let's just look at what economic events we have on the docket overnight that's going to be impacting pairs we trade, and then start breaking down market structure, price action, and mapping out trade ideas across the board. Okay? So January 31st going into February 1st overnight, still through Asian session, we have some PMI manufacturing data that's more impacting Ireland there. Then we have retails. I'll be talking about US 30 as well after we go through what economic events we have on the docket. I'll scroll down further. Okay, so a lot of data overnight, especially impacting Eurozone and Euro pairs, which we'll talk about in a second here. So Japan unemployment rate, jobs data during Asian session hours, this has already passed. The data was pretty much neutral, lackluster. We have some manufacturing PMI for Japan. That's in about 10 minutes. Still expecting neutral, lackluster, not impressive data. Not too much impact expectations. Retail sales and cash rate for the Reserve Bank of Australia. This isn't too important. We don't really trade the Indian rupee or Russian ruble. 2 a.m. Eastern during pre-London hours, nationwide house prices for GBP impact. Also at 2 a.m. Eastern, retail sales monthly and yearly for Germany, which is going to impact Euro pairs. 2:45 a.m. Eastern, still pre-London hours. France CPI, going to impact Euro pairs, still expecting high inflation from countries across the world. 3:15 a.m. Eastern, manufacturing PMI from Spain. 3:45, 3:50, 3:55, and 4 a.m. Eastern, we have Italy, France, Germany, and Eurozone overall market manufacturing PMI and unemployment rate change in Germany. 4:30 a.m. Eastern, we have Bank of England's consumer credit report, mortgage lending approvals, and the market manufacturing PMI. So some mixed data there for UK all at the same time. What I mean by mixed data is like you're looking at various sectors. Here you're looking at the housing market and mortgages. Here you're looking at the services sector's manufacturing PMI. Here you're looking at consumer credit report. On a 5 a.m. Eastern, Eurozone's overall unemployment rate, they're still expecting overall high numbers, myself as well. 8:30 a.m. Eastern, Canada's GDP. 9:30 a.m. Eastern, Canada's market manufacturing PMI. 9:45 a.m. Eastern, US market manufacturing PMI. 10 a.m. Eastern, ISM manufacturing PMI, which I expect this data to be a bit off and poor. So I'm expecting the US data to be a bit off, but the Eurozone data and UK data to be relatively neutral, lackluster, not have too much of a market impact unless it varies very far off from the forecasted figure, which I don't see any reason why there would be some type of surprise figure. But we do have a lot of economic data overnight if you're trading London and New York tomorrow that you want to keep an eye out for. Okay? So now let's start breaking down market structure, price action, and understanding the overall movement on these pairs. When we're looking at gold here, you can see the historical repetition to what we've seen to the left is very, very, very similar if it loads. Right? Very similar to 2008. I'm just going to color code it. If you want to know the fundamental explanation behind the reasoning and what's going on here, you can watch the previous educational webinars, which are shared for free on YouTube. This was 2008 financial crash period. This was pandemic and so forth. I still see similar having a tongue twister there, similar technical and fundamental repetition taking place over the course of the next months going into the next year. All right. Okay, so higher time frames on gold as we're having inflation start to be combated, signals towards rate hikes. We're at all-time high price points, at historical high price points. I'm in a higher time frame bearish bias on gold, expecting us to have a repeat of history of the post-2008 financial crash, as the technical repetition is identical to the fundamental repetition. Okay, you can see the new yearly period has already collected some sell orders to the upside and made an upper wick, and we have a lot of potential to fill the order flow down into the 1700s and 1680s with the current fundamentals in play. When you're looking at the intraday time frames here, you can see you enter this very messy range in consolidation, but overall still respecting bearish market structure with anticipations that we can start revisiting, especially if we don't clear these supply zones, which we haven't, and stay below these price points of interest to the left. With the current sentiment from the Feds, we could easily start making our way to the downside here, right? This is higher time frame macro analysis. But as manual retail traders, we have to understand a few things, and that's staying adaptive to the market waves. Last week, we had a $50 an ounce drop on gold value overall. And that move was also to close off the month now pretty much, and we're setting up the new monthly order flow. What we can see is we're starting to create a little bit of support and getting exhaustion by the sellers at this previous demand zone and very key price sensitivity area, both for buyers and for sellers across the board. Institutionally, you can tell that this area around 1780s is a very, very key price zone that we drove all the way down to the downside to. Now, overall, I'm bearish, but to see gold do a pullback before continuing down is completely normal. Let me give you guys a great example. Okay, let me give you guys a great example. For example, let's look at here. You see gold peak to highs, sellers jump in, impulsive sell side move that peaks lower lows. Essentially, what you really have happen here is a pullback phase before continuing your way to the downside, respecting bearish market structure that starts to form, right? when you back test the behavior of gold and the transactions between buyers and sellers, it's very normal after having such impulsive downside moves that you enter these pullback phases that can extend for a period of weeks or a period of a month before really continuing your way to the downside again. Do you understand what I'm saying? Even here, you had it's not as aggressive, but you can see the same ideas here. Large impulsive sell-off, pullback phase that goes to retest that area, collect more sell orders before continuing lower. Large impulsive sell-off, pullback phase that goes to retest more sell areas before continuing lower, and you start to get the idea. So now, all I'm looking at here on gold is anticipating that we could easily still have a pullback phase on the intraday time frames that could easily come to retest 1812s and still be very bearish. You can see with this large impulsive bearish move we had, even if we get a pullback from the lows to 1812, that's still roughly only a 50% correction or a 50% retracement of the overall bearish move in sellers in play. And when you're looking to the left, that would be retesting these previous low price points if we do have that pullback run, which lines up with 1812. So if on the lower time frame we continue to respect this pullback structure, I could easily see us making our way up to 1812 before seeing more sellers in the market and jumping back in with the higher time frame trend, right? Because don't get me wrong, higher time frames on gold are bearish. Last week was extremely bearish. We played those sells. Fundamentals are bearish, but you cannot forget as a manual retail trader to understand how this beast moves. It doesn't just impulsively melt down to hell without having its corrective phases, having its pullback phases before really collecting more order flow and continuing down. So to see when you're looking zoomed out right now in the move that we had last week, to see something like this upside of a pullback phase would be completely normal when you're looking at the overall movement on gold. So these are the trade ideas I see on gold. As we're still early into starting a new month right now, we can see some exhaustion by the sellers at these lows, and we can see some minor lower time frame bullish market structure forming. If we come to pull back to 1792 and hold above 95, I'd be looking for the pullback buys from 1795, buys above 1800, and buys above 1803. These are counter trend trade pullback buys to set up better risk versus reward sells at that supply zone around 1812s. And then in this area, I'd be looking for the high risk, high reward sells. Or if we confirm that this is the pullback phase and sellers are already back in play, I would be looking to jump back into the sells to revisit the lows at 1789 break. If we don't hold this minor bullish structure, the pullback is complete, sell orders enter the market from the 1800s here, and we break below 89, then you could also just take sells back down to these lows. But really, what I'm seeing is these short-term pullback buys to set up the order flow for the new month, then slam it back down with the sellers back in play for the continuation of the rest of the month. Okay? Green boxes being buy entry areas, with the buys being counter trend trade pullback buys. Red boxes being the main bias sell areas. And this is the anticipation of price path and price movement I see. Okay? Now, I'm going to go over GBPUSD, EURUSD, and USDCAD quickly as well, because those pairs' movement last week was also primarily induced by the Federal Reserve hawkish tone. And we can see very similar thing happening on those pairs. After printing those new lows, we can see GU's in a bit of a pullback phase, EURUSD is having a pullback from its lows, and USDCAD's having a pullback from its high points on the intraday time frames. When we're looking at GBPUSD, you can see it's in a similar situation when we had this low printed by sellers, and for about a period of about 3 to 4 business days, you enter this pullback phase that retests bearish market structure before continuing down. I can easily see that happening for the start of this new monthly period and playing some of those pullback buys before continuing right back down. So this is going to be a similar setup to gold, where if we don't break 342 area, playing some of the pullback buys to set up better risk versus reward sells continuations back down. Green boxes being the counter trend trade pullback buys area, red boxes being jumping back into sells. Remember, we're only going to be anticipating and watching these pullbacks on GU, EURUSD, and gold as we watch the intraday price action. We might not fully extend to 3.5. We might have some of these buys play out, come up to 3.48, and start to have the sellers back in play. Okay? This also makes sense because with Bank of England rate hikes this week, not like they're not hiking rates, there's the expectations of rate hikes. I expect Bank of England to be a lot more hawkish and follow tone with the Feds, which would bring some GBP strength, right? This would make some sense against the US dollar, that it brings some short-term strength to collect more sell orders, then US dollar domination comes back into play and we continue down right back bearish. But in terms of intraday trade ideas, this is what I see on GBPUSD. EURUSD is also in pullback structure from new lows being printed. I could see this pullback extend a bit deeper to revisit this order block low and then start looking for the sells back down to these low points. I don't really see any further buys on EURUSD. In Capital Hungry private channel, we played some of those pullback buys last night with the same reasoning stated, understanding a lot of the fundamental volatility was priced in, understanding the start of the new monthly period setting up, sellers taking profit, pullback phases that occur in the market. So when I'm looking at EURUSD, if we were to come up to 1.28 and then break below 2.5, or just hold back below 1.21, I would start to be looking for the sells back down to these low target points, targeting the lows created from last week with the FOMC move, with still expectations of a weaker euro against the US dollar, where the US dollar domination has been too strong, and we still have that hawkish tone from the Feds holding weight, with the expectations of having some labor market data this week and other US economic data that's going to complement and supplement what the Feds already told us in the previous week. So once we have these pullbacks finish up, we should just be continuing back with the overall trend, which is the US dollar strength, and letting the pullback complete on gold, back with the higher time frame sells. Let the pullback complete on GU, back with the higher time frame sells. Let the pullback complete on EURUSD, back with the higher time frame sells once the sell orders are in. And you can play the pullbacks and counter trend trades in the short term as a scalper, but understand what market wave you're playing to accordingly and follow the analysis as shared. Okay? USDCAD. Now, USDCAD, I'm actually jumping into, we've already had a pretty significant pullback here, right? And it's very similar to the previous stretch of price action we had. Buyers print an intraday high. As buyers take profit, this creates this technical pullback structure for a period of about a week, a few days there. you have a pullback to a more favorable demand zone to collect more buy orders, break above the corrective structure, revisit the highs, and continue higher. That's the area I'm watching around 1.266 and 1.27 to have us start breaking back up to revisit these highs and continue higher. So when I'm looking at, don't worry about just the trend line, we're looking at exact price points of interest, okay? If we break below 1.27 and US dollar is still pulling back, you can take some short-term sells, but setting up the better risk versus reward buys at the retest of bullish market structure, which is around the retest of previous highs as well, and medium-term zone 266. Okay. So that's the analysis on gold and US dollar pairs. The main theme being understanding the impact of the US dollar strength and mainly what the Federal Reserve did with their policy positioning in the hawkish tone. Understanding we're seeing pullbacks on these pairs across the board. At the same time, we're starting a new month. So staying adaptive to those pullbacks as we set up the order flow to continue with the trends, which is bearish on gold, bearish on GU, bearish on EURUSD, bearish on UCAD, but we're just setting up the order flow for the new month as stated, like with the example on UCAD and so forth. Okay, now GJ. GJ is a different story here compared to GU. The secondary in this pair is the Japanese yen, which is a lot more bearish on the higher time frames compared to the dollar. Japanese yen overall structure is bearish. We also have the expectations that Bank of England is going to be more hawkish this week, which will bring strength to GBP against the yen. Listen to me very carefully. I'm about to give you a cheat code, okay? The secondary in the GBP pairs is extremely important to the fundamental impacting factor of Bank of England rate decision. This week, there's a 90% chance at seeing a Bank of England rate hike or them following suit with the Federal Reserve and being more hawkish. This standalone on the British pound would be bullish, standalone, but we don't trade the British pound by itself. We trade currency pairs of the British pound against the yen or the British pound against the US dollar. This strength on GBP against the US dollar will bring some short-term upside, but against the US dollar, the dollar strength will still overtake it and dominate, and it will create an upside spike that'll get faded out and sellers still take over. So the hawkish tone from the Bank of England will have an upside spike on GU. Buyers will make their money in the short term, but it will be really only to set up the sells as dollar will dominate in this pair. Does that make sense? But the hawkish tone from the Bank of England will just have GJ trending further bullish again and potentially breaking to the upside of this higher time frame consolidation zone and continuing this historical and technical repetition that I'm just going to color code here and that you can go watch yourself in the higher time frame GJ breakdowns, historical repetition breakdowns, and so forth. Okay? So when the Bank of England most likely brings a hawkish tone during the interest rate decision, it'll be a bullish factor on GBP. Against the dollar, it'll push up GU. Like GU might even go up to like 1.356, right? And it'll look like it's so extremely bullish. But dollar strength will still take over and it will still end up coming back down, fading out that move. Where GJ, because the Japanese yen individually is far more bearish compared to the dollar, which is extremely bullish, that bullish factor of GBP will just have GJ trending more bullish. So this is what I can see on GJ, is we're starting to create some stronger intraday bullish market structure for the time being. And we're just going to play this structure for the time being until we have any other confirms. But with Bank of England rate decision, I could still see that if GJ was to break below 154, we could easily come down to revisit these lows, collect more buy orders for the Bank of England rate decision before continuing back up bullish again. Okay? Now, Bank of England rate decision is obviously days away. Right now, what we can see over the course of the last week is GJ's respecting some bullish market structure, starting to break out of the bearish market structure laid out here. And we still have Japanese yen weakness, and UK equity markets are still higher time frame bullish for the time being. That short already played out. You have to understand, the YouTube 1-minute analysis breakdowns, there's only so much information I can give in 60 seconds. I can't give you the trades for the next year on GJ in 60 seconds. You got to use your brain and use some logic a little bit. Those 60-second webinars are just for the next day, couple of days. That was last week, the GJ, like where we were talking about pullbacks to here, and those sells played out for the 50 to 100 pips multiple times there, right? But the same GJ 1-minute breakdown video, I can't, how much information do you expect me to give in 60 seconds? The only reason I do those videos is because the majority of you, like how you're showing yourself, got really low retard level attention spans, right? So I'm just trying to keep capital hungry adaptive to the retard low attention spans of people and keep things fresh. You know what I mean? No, seriously, people got low attention spans nowadays. That's why big social media corporations design the applications how they do, with endless scrolling, very short videos, endless amounts of content to keep scrolling past. It's because people's attention span is like retarded nowadays, you know? I'm being serious. Why don't you guys Google this? That's the reason why TikTok and these apps are designed that way. To keep people hooked on and feed them dopamine hits with their low attention span. They're farming attention, literally farming data and attention. That's time and energy, right? You know? But anyways, GJ trade ideas. If we hold 154, 5 buys, break above 155 buys. I would only be taking short-term sells if we were to break below 154, and that would just be a Bank of England buy price setup to set up better risk versus reward buys at a 153 double bottom. Yeah, one of the reasons especially new retail traders struggle to study and fail so much, and 90% of them keep losing, is because they don't even have the attention span or focus or to stay dedicated to something for longer than 30 minutes or an hour. People can't watch hour-long webinars. People, never mind watching an hour-long capital hungry webinar, people can't even go research information themselves anymore. And now they can't even watch webinars online. It's like they don't have the attention span or focus for it, you know? I actually did a Twitter podcast about this if you guys want to listen to it, but it's an hour long. Anyways, these are the GJ trade ideas. Playing this bullish structure, 154, 5 buys if we hold, 155 breakout buys, looking to target 155.5. I would only sell GJ below 154.2. Those sells would be down to these previous lows, where I would still see Bank of England potential buys from that area. Now, the GBP bullish bias I'm talking about is if the Bank of England is more hawkish and follows tone with the Feds. Okay? Last but not least, US 30 stock market index. So we saw a lot of fear arise and massive profit taking by buyers, creating this stronger bearish market structure from these highs and a huge sell-off on equities all the way down to this 33,500 higher time frame demand zone that we have failed to break multiple times here. Overall, the conditions that made investing into the stock market so favorable from 2 years ago, such as low crash prices, low interest rates, increasing inflation, asset purchase program by the Fed, all of those various factors are now being removed. I can see US 30 dig a little bit higher for the new monthly period, but that would really just be to give another chance for buyers to liquidate positions before we start to enter some bearish corrective market structure and enter a bear market on the US 30 with the inevitable rate hikes to come. Okay? But in the short term, I could easily see US 30 still coming up to 35,500 and so forth, as we're getting exhaustion from those previous demand zones at 33,500 and a break and retest out of this consolidation zone. So in the short term, 34,600 buys, 35K buys, 35,200 buys, to retest potential sells at 35,600. Okay. Now, anyways, everybody, this is just a Monday market update webinar. I want to make sure everybody can get some concise, useful information within the short period of time we do this webinar. I don't want to make it too long, so make sure you share this around, you spread the information, you rewatch it as needed. Tons of fundamental information given about the Federal Reserve, market timing, the economic events we have. Tons of information about technical breakdown, fundamentals, and trade ideas given across the board. I'm going to end the webinar right now, and it will be saved on the YouTube for whenever you want to rewatch it. You know what I mean? And I'll see all of you on Wednesday, 7 a.m. Eastern, for the New York scalping session live on YouTube. Tuesday and Thursday, you can also expect some 60-second breakdown videos on a pair. Like I might do it on gold or GJ again, a 60-second analysis. Do you guys, but quickly before I leave, do you guys enjoy those 60-second news videos and 60-second analysis videos? The analysis videos can only really be used for the next couple of sessions. It's more just a day trade and quick scalp trade idea shared. But I hope it's still informative, breaks down some quick fundamentals, technicals, and gives you a trade idea. As well as the 60-second news really gives you a breakdown about some fundamentals impact in the market. Yeah, so you can expect those throughout the week as well, all right? All right, everybody, if you enjoy these webinars, do me a favor. It's free to do. Send a like, comment on the save stream after, and I'll see all of you on Wednesday morning, 7 a.m. Eastern. Trade smart and trade safe.